Okay. Hello, hello. Good afternoon, everyone. Muy buenas tardes. Espero que todos estén bien, and I hope everybody, the mothers, had a very happy Mother's Day on Sunday, and especially those that the mothers that are not around. It was a special day, and I just, I want to wish a happy Mother's Day to everyone on Sunday. Um, there are some really special announcements that I'm going to make today. It's The announcements are having to do with promotions from credits that the lenders are giving. One of our lenders is giving borrowers, and I want to go over a couple of things here. I want to go over the 1-0 buy down. If you don't know what a 1-0 buy down is where let's say the rate, we have a rate right now at say six and a quarter. The lender, we have a lender that will pay down that rate 1% to five and a quarter for the first year for free. That's a pretty big savings. Okay, just to give you an idea, um, on a mortgage of $400,000. Okay, on a mortgage of $400,000, that's 6.25%. Right, 30 years. The payment is 24 2,462.87, and the payment at five and a quarter is the payment at five and a quarter on a $400,000 loan, 5.5 and a quarter, 30 years. Wait a minute. Okay, 400,000 at five and a quarter, 30 years. The payment is 2208. Okay, there's a savings, first year savings of $253 a month. That's a big deal. 253 times 12. This means that the lender is giving you back, or giving the buyer back, $3,000, $3,036 in form of a credit at closing, by lowering the rate from 1 point. That's what a 1.0. Then after the first year, the rate will go back to the normal fixed rate at six and a quarter. It's not an adjustable rate. Okay, this is a little more a detailed explanation of how the 1.0 rate. I'm sure you've heard of the 1.0, 2.0, and a 3.0 buy downs. This is a one year buy down. Okay, let's see here. You see the screen. Let's see here. Make sure we're recording this thing. Yeah, we are recording. Okay. All righty. So here's a sample of a 1.0 buy down. Okay. Okay. The lender here is given 1.0 lender paid temporary rate buy down, and the lender is given a credit to offset the 1.0 buy down. Okay, that's basically the way it works. It's a great program. I'm telling you, your buyer will be saving 200 and something dollars, $220 a month, over a period of 1 year. So that's a savings of 3,036. Okay, and in addition to that, this is a limited time only. Okay, it's going to go away June 30th. So we have to, if you have a buyer that's interested, it's got to be, they have to be under contract before June 30th. So we got about 45 days on this free, 1.0 buy down. No other company is doing that right now. This is the only one. Also, we're offering, for a limited time only, we're offering free credit reports. Uh, Credit reports have gone up 3, 4 times, almost 300%. I remember I used to do credit reports for 15, 30, 15, 20, $30. Now the average credit report is between 130 and $150, almost as much as an appraisal fee. So you're looking at a savings of about $150, plus the savings here of 3,000. Also, we're offering a free appraisal until the end of June. So you're looking at another 500. You're looking at almost $4,000 credit, for the buyer, for the consumer out there, which is really it's really unbelievable, the credit that they're getting. Okay, so if you have any first-time home buyers out there, now's the time to talk to them. And the inventory is pretty high, so it's a very, very good time to go out and find real good deals on properties. A lot of the owners right now are paying seller concessions, closing costs. They're lowering their prices. Uh, they're being very flexible as far as financing because the properties are not selling as they used to a year ago. So that's it's a great opportunity for the first time home buyer right now to go out and purchase a home with all these advantages. Also, I'm going to go over a little known secret that really nobody knows. Majority of the mortgage brokers don't even know that this exists. The Fannie and Freddie has approved a credit model called Vantage Score for all conventional loans. Okay, so which means our lender is one of the few lenders that can use Vantage scores versus FICO scores. Okay, and let me go over that with you real quick. The difference is that you might on a Vantage score, your borrower may be able to get a higher credit score, or those borrowers that have limited amount of credit history. The Vantage credit score uses like their utility payments, their credit card, their utility, their telephone payments, Florida Power and Light, their water bill. Those payments are used for credit reference. So that helps your borrower increase their credit score as opposed to FICO. FICO is primarily driven by credit history, your FICO score, and of course the balances on your credit cards, and that has a lot to do with the credit score. But if you compare, both the Vantage, what we do is we compare Vantage with FICO, and we will pick for your borrower the best score, and Fannie and Freddie will accept the highest score. So it's really a great thing that they came up with that. And I just called. I was talking to two lenders today, and when I mentioned Vantage, they didn't even know what it was. So this is new. This is something that just came out, brand new, and we are we're working. The Vantage scores now are included on the loans that are even 3% down. Okay, so it's great. It's great news. Okay, great news. Uh, FICO versus Vantage score, something that you need to learn about, and it's extremely important to get your buyer in there. And this normally these types of credit reports are kind of expensive. If you were to pay both of them, it'll probably be somewhere around $200 is what I'm expecting. Okay, and for now, for a limited time only, there's no cost to the borrower on these the Vantage and FICO scores. Okay, um, let's see here. What else I want to go over? Those are the two main things that I want to go over. Um, One other thing, remember, well, on conventional loans right now, we have a 3% program. Okay, 3% down payment, with no income limitation. So your borrower can earn as much money as they want, and they're not going to be penalized for the, for the 3% program. Okay. Right now, FHA is pretty popular because the rates are lower on FHA, but FHA has the premium, the MIP premium, which also that increases the mortgage payment for your borrower. So what I normally do is I do a comparison to see which is the best loan for the borrower, whether they should go, FHA, or whether they should go FHA or conventional. And I do the comparison, and then we'll go from there. The whole idea here is saving people money, getting them into a lower, mortgage payment. That's the main thing. So no, things right now are a little slow, as you know, but uh, right now is right now is the time to buy. Okay, it's the time to buy because the rates are not too high. They haven't gone any lower than what they were a couple of months ago. But there's more inventory out there, and there's a much better possibility that your offer, could get is going to go through. The sellers are more willing to work with the buyers as far as closing costs and so on and so forth. So just to let you know, the market is strong. Properties are out there, and now it's an opportune time to buy. Okay, much better than it was a year ago, for sure. Um, the other news I wanted to go over is, a lot of people are doing these HELOCs, home equity line of credit. We just came up with a HELOC program. Let me give you an idea how it works. It's a HELOC. It could be a first or it could be a second HELOC. Okay, and you pick the payment that you want to pay. So let me go over that. It's called Equity Select. Okay, Equity Select. Let me go over here. All right. All right, let me give you an example. On this Equity Select program, um, there's a case right now that one of the big banks turned down a borrower for a $200,000 home equity line of credit. Okay, his payment on that $200,000 home equity line of credit was with the big bank was $1,250 interest only, and the rates on those HELOCs are ranging around 7 to 8% on average. Okay, Equity Select. Look at this. This is what we were able to do for this borrower that was turned down. We were able to get him, instead of 200,000, we were able to get him $800,000 loan. Okay, um, approved 800,000 and a monthly payment of 667 per month, initial payment. That's the initial payment of this loan. Now, can you imagine? Here you have a scenario that you have a $200,000 loan paying a monthly payment of 1,250, and we're increasing that loan to 800,000 with a payment of $667 a month. So we're reducing what he was paying by 50%, and we're increasing his loan amount by four. So it's an incredible program. Okay, and if you want to know a little more about it, just give me the numbers of what the owner wants, and we'll go from there. This is very similar to a reverse mortgage. However, it's better than a reverse mortgage because there's no age limit, and that's important. And the spouse, it doesn't matter if the spouse is younger, they can still qualify for the Equity Select. And there is traditional qualifying. However, it's very, very lenient. Okay, it's not something that, but you do have to qualify for this program. But nowhere, there's no other lender out there that is offering this program. Okay, very, very few lenders are offering this right now. Equity Select it is approved in Florida. So if you have an owner that needs money to remodel a house or whatever, there's no age limit, so we can help them out. Okay. And here's another example. that I'm going to show you. Okay, look at this example here. Shows the power of equity select. Here, a traditional home equity line of credit. This particular person qualified for 33,000, and the monthly payment is $260 a month. Okay, here we can give them for the same monthly payment. We can go from 33,000. We can go to $200,000 equity line. Okay, and the payment will remain the same. Okay, how can they do that? Well, uh, they do that with 5 option payment plans. See here, they give you of the loan amount, you can pay either 1%, 2%, 3%, 4%, or 5%. If the rate is eight and three quarters, you pay 1% of whatever the mortgage balance is, and the difference will be added to your principal. Okay, so if in the future you decide to pay it off, you can pay it off. But for the time being, if you need to remodel your house and you don't want a high payment, this would be the way to go. This home equity line of credit. Okay, so that's something that you should talk to your buyers about. You should have when you speak with someone, you need to be aware of all of these programs that are out there. Because believe me, a majority of people or consumers out there are not aware of all the programs and the available money that's out there for them to be able to either remodel their homes, use the money for investments, and so on and so forth. And let me also let you know that being an investor, buying properties is one of the best investments that you can make. Buying a property and renting it. Rentals are very high. The majority of the buyers are the young first time home buyers cannot afford to buy a home. Okay, so what's going to happen? They have to rent. So there's always going to be a high demand for rental properties, plus all the tax benefits that the investor gets from the rental property. So if you have someone that's interested in buying an investment, we can buy. We have programs. The DSCR program is a great program where they can put as little as 15% down, and they can buy an investment property. Okay. We can do, if they own a property, we can do an equity select. They can get the 15% or the 20% from their own home to invest in another property. What a great investment, and what a great retirement, long-term investment. Real estate has always been known as a long-term investment. you know. However, if you want to get into the flipping of the properties, you can do the flipping with this equity line. What could you do with an equity of 300, 400, $500,000? You can buy a property below market value and fix it up and make a profit, of 20, 30%. You're not going to find any other investment that gives you that kind of rate of return. Okay, there's no other investments. Banks are barely paying 2%, 3% on your money. And my father always told me that the best investment that you can make is invest in real estate. And families are always going to have children, and ladies are always going to be have kids. They're going to need a house. Housing is something that is very, very needy, especially in South Florida. It's become a necessity. Housing is no longer it's not a luxury, it's a necessity. And if you own you own apartment buildings or homes or whatever, you have a value there that's increasing, that is going to be going up in value. And now with inflation, I just heard the inflation this year went up like close to 5%, 5 or 6%. That's a pretty high inflation rate. And this also has a lot to do with what's going on with the war, the inflation, the gas prices, and so on and so forth. Um, so I went over the Equity Select program. We can do the equity select program on a first, or we can do it on a second mortgage. Either or. Um, let's see what else I was. Oh, one last thing. I went to a webinar. I listened to a webinar today on something called an application called Kubi Casa, CUBISASA, and it was really interesting because you can for this is for free, okay? You can actually prepare or do a floor plan of the house listing that you have, okay, for free. Just it's very easy. Um, Here, the black and white is free, okay? And say if you want color, it's $15, and I think for the 3D, it's $65. But for the black and white, it's free. So when you're listing, most buyers out there are they looking at houses, and they're looking at the floor plans. And if you can combine the floor plan package with a 3D with pictures like this, look at this. I mean, your house is gonna be far more appealing than a home that doesn't have a floor plan. So I'd recommend that on all your listings that you do a floor plan. Okay, and you do need to upload the application. It's called kubicasa.com. Okay, it's a program that our board of realtors came up with, and it's free. I don't know about you guys, but I like free stuff. You know, with everything so expensive the way it is, I love free stuff. Um, this is a link that I have here for. Let's see if you want to just go ahead and copy it to get the link for this for Kubicasa. Here's the right here. Yeah. But or you can go to the matrix, and go to the board page there with the education, and they have a course on this, which it's about an hour long today, but it was very interesting. Something I didn't know before. In fact, I recently had a floor plan on a house that I did, and the photographer charged me for the floor plan almost $200. And here the floor plan is for free, and the 3D is only $65. So you can imagine, $65 compared to the $200, and that's a big difference. Um, Anyway, that's all I have for today, guys. Remember, if you need a pre-qual, if you need me to help you pre-qualify a buyer, I can do it pretty quickly. Just give me a call, and we'll do a Zoom, and I'll ask them a couple of questions, and we'll go ahead and give you the pre-qualification letter, as we speak. Okay, because I can do it. I can do it in less than 10 minutes. The prequel. Okay, and I'll figure out the 110 the buy down, the 1% buy down for you, and I'm telling you, talk to your first time home buyers. They're going to be saving close to $4,000 on the purchase of the property. So that's a big deal. All right now. Whatever I can help you with, I'm here to help you. We work with over 30 lenders, and they're a lot of lenders I have are very aggressive. They want to make loans, and we have we have every program out there available for the consumer. Okay, so whatever we can help out with, we're here to help. Okay, you can reach me either by calling me, or you can reach me online. My office number is 305-888-2111. 305-888-2111. As for Allegra, I've been in the industry for over 40 years, my whole life. So, I'm here to, I've been here for a long time and I'm here to stay. So, and my main objective is to help people get into their homes and provide a good service for the consumer out there and save them money. Okay. I I don't believe in selling your house. You know, I believe in helping you decide what's best for you. Giving the consumer the alternative. What is the best deal that I could get for them? Okay, that's the whole idea. And you do that, and you have a happy client for the rest of their lives, and that client will come back to you over and over again, never forget you. Okay, so that's why it's important to get back with all your clients. Especially the ones that bought any client that's bought a home 5, 7, 8 years ago. They're sitting on a huge equity right now, and you might want to they might want to remodel their home. I know a lot of these older homes, they the insurance is just killing people with because the house is old. The roof is old. There's no impact windows, and just by remodeling your home, a new roof, impact windows, so on and so forth, you can save 30 to 40% on your insurance premium alone. That's a big savings. Insurances right now are running 3,000, 4,000, 5,000, $6,000 a year. So, you're looking at a savings of about 30, 40%, almost $1,500 in yearly savings, by improving the house. So is it worth it? Yeah, it's worth it to get a HELOC and remodel your house. Okay, well, listen, thanks a lot, and I'm here for you anytime you need me. Okay, and that will be the end of our meeting. I hope you learned something. Okay.